let me know if you guys can hear me and see my screen. We'll begin shortly after. Phil, Michael, Bill, Bob, present. Good morning. How's everybody doing? All right, let's see. Okay, Discord guys are here. This is here, short chat. All right. Let's see what else doing. Let's look at pre-market trades. Give me 1 second. Halliburton is down. Okay, what else? General Motors. How's GE doing? GE still up. General Motors. It's Verizon. Verizon is down. So let's put an order to close Verizon. Okay. All right, Discord guys are present. Go to webinar guys are present. I caught up. think we are ready to start. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Tradespoon and Yellow Tunnel. And today we're going to have our live trading room open to trade stock and options using the technology. We're going to talk about Verizon Trader and key levels and spiders and what to expect as earnings season has started. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. I want to take this opportunity to say thank you to everybody. Because of you, I'm able to do what I enjoy professionally, managing and trading my own money. I've been doing that for over 20 years. Mentoring and teaching subscribers how to trade stock options. We have live trading room every day, morning bell and closing bell. We have educational webinars on trading psychology. And finally, my background is computer science. I have a master's degree in computer science. I work in several startups here in Chicago, financial startups, brokerages, firms, hedge funds. Love building models, neural networks, artificial intelligence. Everybody talks about this. I've been doing that for, since my master's degree. So build a lot of technology to help me navigate market conditions, and that's why I'm here. So thank you very much for attending. Trading involves risk. Trading stock and options involve risk. So if you're new to trading stock and options, I encourage you to visit the link on your screen. You can always pause the screen if you need to write it down, optionscreen.com, to understand the risk associated with trading stock and options. I'm not a financial advisor. I'm not registered with FINRA or SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also should not be assumed that the future trade picks will be profitable or will best performance. We are trading in the bear market. Obviously, a controversial opinion. It's not a fact, right? Half of the people think we're trading in the bull market. Half of the people think we're trading in the bear market. Let's assume, since we haven't reached the highs, even though we're still up 20%, we're going to assume that, we don't have to assume, in the past 2 years, market didn't go anywhere, right? We're trading flat. If you start trading 2 years ago, exactly on this date, you are probably best case scenario flat. So we are trading in a trader's market, right? Where you have to be able to learn how to be long and short the market at the same time. Very difficult task. Our brain is not wired for negative thoughts. We try to push them away. We always think that market just goes in one way. In the past 2 years, it didn't go anywhere. One has to assume that in the next year, potentially next April, we're still going to be at the same level that we are now. So it's very important to wear traders' hat. How do traders think? Traders think it's all about risk management, right? It's all about, you can be long the market, you can be short market, you can be market neutral. It all doesn't matter. What matters is how many positions you have and then position size. Go through the positive and negative visualization, have set of rules, have a checklist, right? Every time you place an order, there's a checklist that goes against your trading plan. And in that checklist, you look at your cash level, cash position, you look at number of positions, and you look at the position size. You document the trade. Every professional trader keeps a journal. Not every, but majority of them do. And they grade, right? You're encouraged to grade your trades, right? A and B, if you follow in the process, and based on outcome, you put A or B. But if your most important is an outcome, and process is secondary, then you grade C or D. Professional traders, they're all about process, right? Trading is just like a business, right? Yeah, sometimes you have to take risks, but for the most part, there is a process, there is a routine, there is, stand-up meetings, you take notes, you have your monthly goals, annual goals, you look at your cash flow, you look at your expenses, you hire people. It's a process, right? It's a repeatable process that you can write it down, give it to somebody, and they can repeat it and build it again. Trading is the same thing. It's a business. You should try to treat it as a business and have a set of these rules. The most important rules to me, cash. If you think we're in soft landing and we can avoid the recession, then I propose 30% of your portfolio in cash. If you think we cannot avoid the recession and there are more signs that we will get into recession eventually, then I encourage you to have 50% of your portfolio in cash. All right, how do you do negative visualizations? Right, you look at the spiders. I encourage you to look at the spiders. We've been trading in a very narrow range, right? Since basically April 1st, we're trading exactly at the same level as on April 1st. So for the past, months, for the months of April, we're flat. Very similar price pattern that we had, in February, right? We've been through these consolidation phases, right? Like these rectangles, many times, right? Sometimes market breaks to the upside after this, sometimes breaks to the downside. But it looks like we're going through consolidation phase. So let's say you're in a soft landing camp and you think we can avoid the recession, right? And you hold in position for a few weeks, few months. Let's say you want to go long, right? We're trading at 410. Maybe you're waiting for a little bit further pullback, 406. Right? Let's call it 406. Or maybe you're not. You're doing it 410. If you're an aggressive short-term trader, that 410 has been for 2 weeks. It was able to hold on. So maybe you're buying at S1, maybe you're buying at support 2, right? And you're bullish. You think that we can avoid the recession. JP Morgan had great earnings. Bank of America had great earnings. Procter & Gamble, Pepsi today had good earnings. They're able to raise prices, pass it to consumers, low unemployment. Life is good. All right. So then the second question is the size. How much are you willing to risk? Right, because it could be soft landing, it could be hard landing. There's still more evidence. There's more every day. There's more evidence that recession, probability of recession is increasing. So, what is the position size? If you're a day trader, right? If you're a day trader and you bought, let's say, pre-market 410, and we were able to hold on to this level, right? Then I would go to Stock Forecast Toolbox, or you can find it on Yellow Tunnel, Aggressive Power Trader. And your support is at 408, 409, 413. So 409, 410. So if you're buying 409, 410, question is how much, right? If you're doing day trading and you're doing off of support 1, well, there's really no stop. You can basically have very small, you can, again, on $10,000, you don't want to risk more than 2.5%. Right? If you hold it overnight. If you're doing day trading, so that's $250. If you're doing day trading, you need to have $25,000. $25,000 minimum. Right, and then you should risk less than 1%, so less than $250. Right, so if you're doing day trading, you think market is not going to break the 410, right? So maybe $1 or $2, right? So $250, you can buy 100 shares, 100 shares, and 0.5% stop loss. Market volatility have dropped. VIX is at 16, trading very narrow range. We don't have days where the market moves more than 1%. I don't know, since April 1st, right? So very low volatility bands are contracting. 100 shares, and if we do drop below 408, right? Model set 408 is your stop loss. Okay, so that's your $200. If you don't like day trading, if it's, we could be there in the next 15 minutes. And you say, Vlad, this is too much fun. I like to hold it for at least a week or 2. In the past 2 weeks, support was 406. So then your stop loss is about maybe $5, right? $5 is your stop loss, right? So then you have to decrease the size, right? You can't really afford to buy 100 shares because 100 shares times 5 is 500. So you do, right, 50 shares. Right, 50 times 5 is $250. Again, you don't really know if the level will hold or not. Right, at first, First Republic Group had earnings that were worse than expected. $100 billion of deposit outflows. You have gasoline prices drop by 50% year over year. Right, very weak demand for gasoline for transportation. UNH had pretty bad earnings. So we might reach 406. In the next 15 minutes. So for that reason, I would split it up, right? I would buy maybe 25 shares now, and 25 shares, if we do reach 406, because 406 is a key level, right? For this box, for this consolidation. For this box consolidation, it's a key level. If we drop below that level, then, high probability we retest March lows or December lows, right? If we do break above this level, that's the February high, then the next level would be 430, right? That's the resistance to, that's August high, right? So August high is R2, January, February high is R1, and those are your resistance and support levels. So very important to respect them, and very important to calculate them so you know what is the appropriate size, right? If you can get into make it mechanical in terms of position size, number of trades, and you do the same thing, it doesn't matter what you trade, whether it's Bitcoin or futures or I don't know what it is, treasuries, pork bellies, same process, right? It doesn't change. All right. Meanwhile, Spiders is down 0.5%. We have a lot of earnings this week. So CLF, if you were at the closing bell, these are the 5 stocks I did in my personal account. We did Verizon together, right? Together in earnings power trader, right? So if you go to so if you did the earnings power trader, right? Verizon was on the list of stocks announcing earnings. 30% of S&P 500 companies announcing earnings this week. So the busiest week of the earnings season of this quarter. So I did Verizon, right? Collected 9 cents and 9 cents, 18 cents. 18 cents, it's a, what is it, $35 stock. It's roughly 0.5%. So now I need to close it. Right, Verizon is trading lower. Hasn't reached, 0.5%. It hasn't reached. It's still far away from the strike price, but it's Tuesday. I don't want to hold this trade. We need to free up buying power for other trades. So let's do that. All right, Verizon. I'm going to put a trade to try to close for 2 cents. So that's Verizon. Let's put an order to close the trade. So we'll start with puts. Puts is trading at 2 cents. We'll try to close it for 2 cents. A lot of people ask, why do I close it if it's far away? Why not wait till expiration? One is the buying power, right? This is pretty intensive buying power trade because you're doing a wide spread. And the other one is that market is volatile. It hasn't been volatile, but it could be. So you want to be able to. Eli Lilly just gapped up, right, prior to earnings. It's up 1.5%. So I did half of the order, right? I still have the other half from yesterday at 402, mindful of earnings. So in the next 2 days, half of the shares I close, half if you believe in their drug pipeline and that they are, mainly, the weight loss and obesity drugs and what is it called? Diabetes, right? So they're one of the main players in that area, and this is #1 TikTok video that just millions of people are watching. So I think there's a couple companies that are in that space, LLA1. So maybe close half. The other half, it's up to you, right? If you believe in the drug, it's nothing to do with the model identified for short-term trade, right? That's your just like earnings power trader, we have aggressive power trader, right? So you have these signals every day for sure, but they're short-term trade, right? 1 or 2 days. Today, it's consumer staples are in uptrend. You have home builders are on uptrend, healthcare, some of the retail companies like Nike. So you have these uptrends, but if you hold them, the signal is trying to analyze 1 to 2 days. If I want to keep LA Lilly beyond 1 or 2 days based on active trader or aggressive power trader, this is my decision, right? Models are tools to help you make a decision. And if you want to, they analyze certain time frame. And if it's beyond that, then you have to maybe hold it a little longer. All right, so Verizon, I'm trying to close for 2 cents. So I'm out of calls. Now I'm trying to get out of the puts, right? And right now, Verizon, let's watch Verizon. It's kind of not going anywhere. It's kind of not going anywhere. All right, let's see. All right, so GE hit a home run, right? GE hit a home run in terms of earnings, but people kind of anticipated it, right? Maybe not a home run, maybe just a double, right? Maybe double, but it's already up 50%. I'm spinning off their healthcare unit. Healthcare is in strong uptrend, so obviously it's helping their cash flow, but I guess not enough to propel it to new highs. So trying to close GE calls, right? If you were at the closing bell yesterday, I encourage you to join me on closing bell, especially during earnings season. General Motors. So all these haven't traded near range, right? The kind of market is muted. We already earnings season started. So my goal right now to close all of them. Let's see, Halliburton down 1%. I'm going to try to close puts. Okay, General Motors. So Halliburton looks like it's accelerating the pullback. Let's look at 15-minute chart. Let's see what else. Amazon is down 1%. KRE. So the main news are that everybody's following are First Republic Group, right? It's down 30%. Again, one of the larger regional banks, for whatever reason, everybody's paying attention to it. Most other regional banks were, I think, okay during earnings season, more or less, but at First Republic, large outflows of deposits, down 100 billion, and basically the idea that, yeah, you can inject liquidity and give them a credit line, but, all the fees that are attached to this credit line makes it basically not profitable, right? So First Republic basically, unless they can restructure their debt at more favorable terms, at some point, the bankruptcy is, probably, or not, maybe not bankruptcy, but at least, they're not making any money, right? They're not going to make any profit. And PE, I think they're saying like PE of 1, price to earnings 1.7, right? So basically, almost nobody wants to give any multiple to their cash flow or their balance sheet. Mark, good morning. Bill, good morning. Fred, good morning. Faust, welcome back. FRC down 30%. Scott, yes, Yellow Tunnel is separate companies. Tradespoon, Yellow Tunnel, separate companies, but I'm a founder of both. Yellow Tunnel, there's more emphasis on trading psychology, right? Tradespoon, more emphasis on model. But both, UBS down, yes. VIX1D is trading now. Thank you, Bob. VIX1D, okay. So it's trading. I don't know how to interpret this, but, well, the VIX is rising. Okay, pretty big jump, at least in one day, 10%. What about this is in one day, 10%, $1.60. I mean, I think it's the same thing for now. For now, we'll see, but thank you. The new one-day VIX is in here. All right. Okay. So all eyes on FRC and all eyes on, again, bond market. Personally, I watch bond market more carefully than I'm watching equity market. I think that's 4%, right? It's trading below the support level now, or testing, and 10-year trading all new due to the news of First Republic Group. As soon as the earnings came out, yields just dropped. Again, a recessionary trade, right? If there is a concern of credit crunch or liquidity issues, whether it's financial or commercial real estate, irrelevant, rates are dropping. It's just a matter of time for technology and spiders to follow the suit, right? It is trading in the box. It's going through consolidation since March, right? So for the past 2 months, it's trading in this well-defined box. So there's no any kind of level of panic, right? But I would watch, right? If it does this, market is going to sell off. If it does that, market is going to rally. So it depends what the interest rate. Right now, gasoline prices are down. First Republic Group is down. UPS are down. They are all recessionary signals, right? And it's not enough that Coke and Pepsi are able to raise the price and pass it to consumer, right? That doesn't offset, that's great that Pepsi is able to do it, but not enough to offset First Republic Group and gasoline prices drop. All right, Triple M also announced earnings, positive, but for now muted reaction. And then I would watch dollar, right? That is a strong bull case, right? There are two best bullish arguments from bulls, right? One is that dollar had significant drop. It will help Q1 earnings, and there's no way to argue against that. So that's very bullish. It's sitting at the key support. The other argument is China reopening, right? That argument is kind of fading away. China is kind of not falling off, but it's back to December lows, right? It's sitting on the important support opening, and Louis Vuitton selling bags for $25 million a bag. One of the largest now companies, and the CEO of Louis Vuitton is now the richest man in the world because everybody is buying Louis Vuitton bags, including my wife, spending some funny numbers like monopoly money because of China, right? Because of China. one of the China reopening, but China itself, the technology, the transportation, their housing sector is kind of pretty big drop from the January, February highs, right? And same thing, I think Germany, right? Germany not as much, okay. But how about VGK? Pulling back. So China is kind of fading away the argument, but the weak dollar, I think without a dollar, without strong dollar, you're not going to see a big pullback, right? You're not going to see a big pullback unless dollar going to get back to 106, 110 level. For now, it's not. All right, any questions about soft landing, hard landing, key support resistance, UPS is falling off? So I would watch, again, I would watch two sectors, IWM, right? IWM, it's kind of traded in consolidation in the box. It's making new lows, right? Not April lows, but it's pulling back. That's bearish. Small caps, I would watch semiconductors. Right? They are also broke through this consolidation. They're dropping. That's bearish, right? New lows every single day. So small caps are bearish, semis are bearish, and then what else did I want to look? Transportation, right? And transportation is falling off, approaching March, December. I mean, already broke through October lows. Is basically 52-week. It's approaching, well, 18 months low. So these are leading indicators. So I would be careful, right? I propose out of 4 positions, even if you're in soft landing, you have 2 bullish, 2 bearish positions, right? You have 2 bullish, 2 bearish positions. I propose, let's see, is Verizon filled? Okay, Verizon filled, TLT, right? So we did short trade with TLT. I'll continue to trade TLT position, bought it at 104.5, sold at 106 several times. Still long TLT. Verizon closed the call, puts, we have to observe. Eli Lilly closed half of the position. Okay. And McDonald's actually up, right? So I closed McDonald's, but it did rally because my restaurants are, well, now it's actually back, it's reversing. Okay, so probably good idea to sell it. Okay. What about the rest of the positions? Let's see. Small caps, right? Small caps continue to deteriorate. I have September position. May, June, soft landing argument is still there, right? It's a weak dollar. As long as the dollar is weak, there will be no serious pullback, right? Market is just going to trade like it is now, like sideways, a little bit higher, a little bit lower. But by September, I think we have enough time. So bearish on Russell 2000. Still optimistic on LA Lilly, their obesity medicine. NOC announcing earnings in a few days. Still bullish, have a small position. Russia-Ukraine war for now not going anywhere. Bearish on QQQ in May, in June, and in September, right? Build an option ladder with different strike price, different options. Why? Because it's very hard to time the market. Right, today it feels like market is going to fall off. Tomorrow we have Amazon and Google earnings, and if they hit a home run, right? If they hit a home run, or at least a double, right? Expectations are very low. Google already expectation that they're going to have negative deceleration in their revenue, ads revenue, right? 2 quarters in a row, which I think is unheard of since they went public. But it could be better than such a low expectation, right? And we've seen that when the expectations are really low, it gives you an opportunity to at least hit a double. So if Amazon and Google are able to hit a double Microsoft today, right? Microsoft and Google, then market can still reach February highs and potentially. For that reason, you do the different strike price and in different months, right? You don't go all in, right? So it's important to have 4 positions, and each position not risk more than 2.5%. So in case I'm wrong and market rallies again, okay, then I don't want to be down more than 10%. SH, If you're not comfortable trading QQQ, right, out of 4 positions, 2 could be bullish, 2 bearish. If you're in soft landing, if you're in hard landing, at this point, I would have 3 bearish, 1 bullish. So bearish position SH, right? SH should rally if the market pulls back. I would SLV. I would buy SLV, right? SLV should rally if the market rallies. Let's see how silver doing. It's actually pulling back, right? It's sitting at the key support level. So maybe it's time to think about maybe adding to silver, especially on pullbacks. Pullback. So it's sitting at the key support and rates are dropping. So maybe a small amount of silver GDX, because if it does break this level, you know, you probably want to buy more at 31. Like at least I'm going to buy more because my conviction, I'm in bear camp and I think people are going to continue buying gold and silver, but they're volatile, right? And it could retrace at least 50%. So you have to, you know, be, you know, if you are buying GDX, you know, your stop loss. If it drops below 50%, something doesn't make sense. So then, you know, at 31, if it drops 10%, you don't want to be down more than $250, right? So if it drops $3, okay, you can buy 100 shares or 80 shares to be down $250. And you want to buy it in increments. So you buy 20 shares today, maybe 20 shares if it drops to 32, right, and so on and so forth. But the idea is, you know, 50% retracement. That happens a lot, right? Especially with GDX. Right, you can have 50% retracement, 50-day moving average, usually a good support, and this way. Right, so here you don't want to stop out. The only way you don't want to stop out if you're down less than $250. Right, so ideally, if it reaches 50% retracement, 50-day moving average, right, it's extremely overbought, right? You want to be down, you know, $150. So you can think about wait till it goes through some kind of consolidation, right, and then go higher. So that's GDX. All right. Let's see, UPS continues to fall off. I'm glad we didn't do UPS, right? It's not enough premium to justify selling Iron Condor, so I did not do UPS. So that's good. Let's see, Halliburton. Let's look at Halliburton. Looks like it's struggling. All right, let me finish Halliburton. How's the market doing? That holding on. Spiders is sitting at 410, right? Key support level, short term. It looks like it's trying to break below that level. I would watch that. And then how's XOP doing? XOP. And XOP is pulling back. Also sitting in the key support, so I would watch these levels. General Motors. How's my General Motors put? Now, if you guys have any questions, take 57. Halliburton continues to drop. So I'm watching Halliburton because I do have 32.5 put. Spiders for now holding on to 410 level, trying to, and that's important level, right? If this level doesn't hold, then the next level would be 407. So I gotta watch that, and then XOP. Also kind of trading lower. Volume was low. A rig is very volatile. I mean, you have a put. I mean, yesterday, the entire, sector, oil drillers rally, right? And now they're selling off. Made me think about getting out. Today is earnings season, so I would look at support and resistance, right? It rallied yesterday, and there is a overhead resistance. You're obviously doing day trading. So it rally, you usually want to wait for, before you would close your put, I would look at the resistance, right? It was sitting right at this level, right? That spans, for day trading, spans over a month. So I wouldn't get out, I wouldn't trade it. I wouldn't get out of the put until you see a continuation, right? Because now it's the opposite. It's sitting at the support, right? I wouldn't short rig right now until I see, breakdown, right? Because you usually want to get some kind of a confirmation. If you're day trading, depends on your time horizon. It could be 15 minutes, 1 hour, but you want several candlestick, right? I would do like 1 hour, right? And I would wait at least 2-3 candlesticks above this level to confirm a breakout to the upside. Same thing, if you want a short rig, I would wait at least 2 to 3 hours to see a rig below 6. Right, like Halliburton, it pulled back, right? It broke below. In theory, well, I'm doing day trading, so I'm looking at 15-minute bars. So I'm waiting for breakdown, right, to the downside. Verizon is down 50 cents. General Motors puts 33 cents. General Motor puts. Okay, so this point is Halliburton I have to watch. You can see it reached it kind of a false breakout, right? If you look at 1 hour on Halliburton, it did pierce through this level on earnings, right? But now it's recovering. So I mean, usually there are A, B, C waves, right? So now we go, this is wave A. Now we're going to go through B, and then at some point, you want to see if you're going to close C. Consumer confidence and housing. Thank you. All right, Market Watch. So today is Tuesday. Case Shiller, consumer confidence and home prices. 10 a.m., 9 a.m., 4 minutes. Okay. Not sure how much reaction is going to have. For now, no reaction. Spiders are still sitting at 410 level. SEM is down 1.3%. QQQ down. Russell 2000 down 1%. Transportation down 3%. So for now, no reaction to the macroeconomic news. Let's see an XOP. Looks like it's stabilizing, right? It's the volume on Halliburton. All right, it's 9:07. So I'm watching Halliburton. Let's see, 15 minutes. All right, CLF is down, GE is flat, Verizon is flat, General Motors down 1.5%, UPS down 9%. Any questions? Brad, close TLT. My TLT, I use it as one of the hedges. So I think it's just a matter. I mean, if you're in soft landing, I would close it. If you're in hard landing camp, I think it's just a matter of time TLT to break through this level. So I'm trading around position, right? When it pulls back, I add it and I close, but I'm going to keep, probably close more around 109, 110 level and leave the rest to kind of continue to go higher as a hedge. That market is dropping, still keeping short side of Verizon. Verizon, I think, is, let's see, thought it got filled, but let's check. Verizon did get filled, or no? Let's see. Call, where's the put? No, it got filled, right? So I'm out. I mean, I don't know if you're out, but I'm out at 2 cents, both the put and call. So I'm out of Verizon trade. Scott, thank you. Consumer and housing on the line. Let's see, home builders. I mean, home builders are holding up better than the market, right? But you can see a big drop in metals and miners, big drop in China, big drop in oil. Dollar is slightly higher. TLT continues to rally. Let me know if you guys have any other questions. I would actually buy TLT. That would be my opinion. If you guys have any questions. All right, so TLT continues to go higher. All right, let's watch Halliburton. Eli Lilly continues to grind higher. Let's see Halliburton. What do we do with Halliburton? Okay. Yeah, Spiders is breaking down. Let's see Halliburton. So I'm going to close the short put. So I'm out of the short put on Halliburton. Let's see if I can close the short stock. Okay, good. it's 9:18. Fred, thank you. Ted, thank you. Wild swings on VX1D. VIX over 18 now. Thank you, Fred. API below 410. Spiders, right? Yeah, I would watch spiders. I mean, Stock Forecast Toolbox basically predicted that 408.93 will hold, right? We're right at that level. So it's kind of a line in the sand for day trading, right? I would take this level seriously. I mean, it's too early to tell, but if today we close below 410, right before 409, I mean, you're gonna have Amazon and Microsoft earnings, so we're either gonna retrace back to 416 because their earnings, they hit a double or a home run, or if they hit a single or strike out, they'll, will immediately retest 406, right? So I won't jump to any conclusions. I think everybody's waiting for Microsoft and Google, Amazon, right, this week. And even then, there's still hope that Apple is going to carry the market forward. All right, that's all I have for today. Thank you very much. Have a great day. You guys have been awesome, and I'll see you at the closing bell. Thank you. Join me for the closing bell. We're going to do more earnings trades. So if this is something you think fits your trading style, please join me at the closing bell. Faust, thank you. Phil, thank you.